Dude, and I see you have military tags on. Thank you for your service.
Oh, you're welcome. I didn't serve. This is actually a medical alert tag. I had a brain tumor in 1997. I just thought it looked fucking cool.
Oh.
You had a brain tumor? That explains a shit ton.
Jimmy, you're rotten.
Yeah, no, sorry. Yeah, this is par for the course, and you know it's par for the course.
My brother used to always say when I would tell somebody had a brain tumor, he'd be like, yeah, you should see the scar on his ass.
By the way, are we taping right now? We should be. Why not?
This is all recorded. All this has been recorded.
Okay, and for those of you who are just popping on now, we got Kenny Polcari. This is the Future's Edge. I'm Jim Urio. That's Bob Iacino. He's the brains behind the operation. He's the co-host. And sometimes I stop talking enough that he can get a word in edgewise. We have Kenny Polcari, who's the managing partner of Case Capital Advisors and the chief market strategist of Slatestone Financial. Is it Slatestone Financial, Kenny?
It's Slatestone Wealth, but that's okay. It works.
Okay, and I swear to God, and this is Slatestone Wealth, but like we had Jim Bianco on 2 weeks ago, and I worry that we're going to dive culturally into a very specific niche show, which I'm trying to avoid. But as long as we have a bunch of Dagos in one place, we have to talk about food first, because we did with Jim Bianco. I know you like to cook, and I know that you're trying to, on this show, be second place of second best Italian cook on this show right now, which I think is a very prestigious spot to be.
I appreciate the compliment.
Oh, nice. By the way, I have a buddy who's Greek, and we decided that the only difference, everything is the same between Greek men and Italian men, except Greek guys don't go into the kitchen for nothing. They just sit back and go, when's dinner ready? Where Italian guys are like, you get out, I got this taken care of. And we're all in there drinking wine. I think the Greeks are missing out. I assume you two would agree as well.
I absolutely agree.
Kenny, give us something, a recipe. It's got to have meat, no just total pasta dish.
No, So I'm going to give you something simple. So I'll tell you what is a great meal that I love, and it's quick, but it's got sweet sausage. You can use hot sausage if you want. I can't because hot sausage, I'm allergic to it. Right, I'll start to sweat. It gets really ugly. It's not worth it. So I'll use sweet Italian sausage. Use broccolini, garlic, onions, and rigatoni. Simple. White wine. And a little bit of chicken stock, and it's perfect, right? So you saute the garlic and the onions, you brown up you cook the sausages on the grill, you saute the garlic and onions. When the sausage is done, you bring them in, you slice them into bite-sized pieces, you set them aside. Throw some broccoli in with the, chop it up, throw it in with the onions and the garlic, toss it a little bit, let it cook. Now take the cut up sausage, put it in there, mix it all together, add a little bit, maybe a quarter cup, a half a cup of white wine, bring it to a boil, let it kind of steam off a little bit. Throw your rigatoni in the boiling pot of salted water. Let that cook for 8 minutes. Got to keep it al dente. Don't let it get mushy. And then with a slotted spoon, take it out and just put the rigatoni in with the sausage and the broccolini and the garlic and the onions. Toss it. Plenty of fresh grated Parmigiano cheese, a glass of wine, and garlic bread, and you're done.
Okay, and for you people tuning in, thank you for joining us. That's been the Future's Edge with Kenny Polcari.
I'm going to stop you for 1 second, Jimmy, if I could. Just for 1 second. We're recording this on a Thursday because we've all got some commitments tomorrow. And normally I have an old fashioned or a bourbon in my hand because it's Friday. I can't do that on Thursday. I got to work in the morning. I'm going to go get some. You guys keep talking. I'll be right back.
Wait, so Jimmy. Yeah. No, so I really want to do the thing with Scott out at your restaurant. I think that's a phenomenal idea.
I think you would. I think a guy like you, who's an old school guy, would absolutely love my restaurants. I swear to God, I'm not saying it because it's my restaurant. We bought it because I love it. It's a 1930s Capone pub.
I hear you, and I love that about it because that's how you describe it. So I love that about it.
Yeah, we could easily probably get it declared like a historical landmark just because of the mafia history and the Chicago history. But we don't want to do that because if Walgreens wants to come and buy the corner lot at some point in time, I want to be able to sell it to them without any sort of hurdles.
Yeah. We should see if we do that. We should pitch the idea of doing this, joining Larry Kudlow or something one afternoon. You and I could be in your restaurant and join Kudlow right from the restaurant. How great would that be?
I would love that. And for those of you guys listen, Larry and I are one of those, like the circle of Kudlow for the last, I call it 16, 17 years. We started doing shows with him before. And of all these punks on social media, like, Kudlow got this wrong, Kudlow got that wrong. I don't give a shit what he got wrong. Kudlow's a good economist and a hell of a good guy. Nobody's right all the time.
That's right.
Okay, I have more bad things to say to those people, but I'm not gonna. We should talk. Eventually, we should talk. See, I told you, this podcast, by the way, is going to be more fun than the other bullshit that people do. Because here we don't have to, pull any punches. We can say what we honestly think. One of my key things that I try to do with many of the macro guests is to try to get them to admit that the Federal Reserve is a bunch of politically motivated half-wits. With you, I don't think that that's a far leap getting you to say that. So I'm not even going to.
It's not a far leap. I'm right with you.
I got it from you. Right? Okay, so anyway, it's Thursday. The markets have been strong.
Yeah.
I've talked to a couple different people, and I've heard people say it. I was going to say I've heard myself say it as well. We never saw that real big VIX spike this whole year so far. We never saw the 45 to 50 VIX, but we are seeing some strength in markets because we are seeing the Fed had the door open for 100 after they saw that retail sales number, and they're still stuck in the 75. Is the market feeling good? Should it be feeling good? Or are we going to have another leg down?
No, I think there's definitely another leg down. As much as I love the fact that the market's been up for 3 days like that, I think really it's a head fake, right? I think it's a dead cat bounce. I think the market's going to go lower again because look, remember when the CPI came out and stunned them, and then the PPI came out again and stunned them again because that was even higher than they expected. And when you took out food and energy in the CPI, it was still higher than expected, which leads you to believe that the inflation story is certainly not going away anytime soon. They started talking not only about 100 basis point increase. Remember, then they even started tossing around the intermeeting rate hike, which would have been in August. That's how nervous they got. And then they decided, they were getting too anxious. They were creating too much. The markets immediately started to go south. And then they felt like they should pull it back. And then suddenly, Chris Waller and all the other ones that were gunning for 100 basis points suddenly said, well, maybe 75 is okay. So now that looks like a win, right? Look, we don't have to go 100. We're only going 75. And so look what the market has done. But I think what's going to happen is that after the Fed meeting, we're going to get the PCE deflator, which is actually the Fed's favored inflation read. But they're not going to get it till after they make this decision next week, because they're making a decision on Tuesday, Wednesday, and I think the PC comes out actually on Thursday, right? And so therefore, it's interesting that they're going to make this decision without having their favorite inflation indicator. Now, the fear is if that number continues to remain strong, then I think it's going to create that whole conversation again about the Fed's too far behind the 8 ball. They got to move quicker. They got to move faster. And I think that's where the market's going to come under pressure again. Now, I don't think they're going to light the hair on fire and the market's going to trade down to 3,000 the way Bank of America or Goldman Sachs or one of those big banks says it's going to do. I don't think that's it. I think 3,600 is the low. I think we've put the low in at 3,600, but I would not be surprised to see us drop, 300 points and test that again. 3,600. That's what I think is going to happen.
I just want to see a bit of a panic at some point in time. I know I'm not wishing for panic for everybody, but we haven't seen it yet, right?
No, and there has to be, listen, we got close a couple of times. You could almost, like I said, okay, here it comes. And then they pulled it right back, right? Yeah. And I don't want to see it either, because I'm not saying, there needs to be panic, but there does need to be a little bit of distress where you start to see them throwing everything out the window, because that's when you're at the bottom. When they start throwing everything out, you go, okay, this is it, back up the truck.
Okay, so you mentioned a second ago that you don't think inflation is going anywhere. Okay, so I have a problem with that. So we've seen copper down 34%. We've seen crude down, what was it down at its worst when Bobby comes back to say, I think it was down 30%. We see the 5-year break evens now at about 2.55, 2.6-ish, saying that the 5-year out inflation is looking a lot better than it did even a month and a half ago. So in my mind, Fed rate hike starts to cure inflation. Inflation starts to cure inflation as long as it's not that wage price spiral. And we are seeing some sort of healings in the supply chain. And I know it's very, very minor. We just saw from the New York Fed, the Philly Fed, supply delivery times have shortened a little bit. Isn't there a chance that all these things kind of come together and we see a Fed pivoting as early as September, October, or am I crazy?
I'm in the other camp. I think there's a chance that it comes together. I don't think you'll see a Fed pivot at all, because I think the Fed is look, even if it doesn't go up and it stays where it is, it's where are we at 9%, 9.1%. It's not going down to 2% anytime soon, and it's going to take a long time for it to come down. But I think it's going to be stuck here for 3 or 4 months, and so I don't think the Fed's going to be able to pivot. I don't think they're going to be able to pivot.
So let's say the Feds, when you say not be able to pivot, you mean not be able to pivot this year, right? I mean, some point in time they have to pivot.
Oh, yeah. I don't think they're going to pivot in September the way you think they're going to pivot.
Yeah. Okay. You're just saying that I'm wrong. I got you. So at some point in time after that, I get you. So
no,
You're
I
just
think
saying
they're
I'm
wrong.
an idiot. That's what you mean.
So I have a question. Okay. So now we had Anne-Marie Band on last week, and we were talking about different sectors. It was a very, very good interview. I thought she was very good.
Who was it? Anne-Marie?
We have some. What do you got there? What do you got there, Bobby? Hold on. Time out. Stop. I'm hungry.
I can't see. What are you eating?
It's a meatball on a stick, isn't it?
Oh, it's a meatball?
Is there anything better than cold meatballs?
No.
Did you make those?
Meatballs?
These are made.
Did you make those yourself?
No. My wife made these. It's a weird thing. My mother taught my blue-eyed, redheaded wife how to make Italian food. And there's a couple of things she makes better than my mother now.
Really?
So we're recording this.
Yeah.
There's a couple of things she almost makes as good as my mother now.
You can edit it.
And one of them is meatballs because she uses more pork than my mother does. You gotta have the pork.
Yeah.
You gotta have
you gotta have ground chuck. These people that use 90-10, you might as well eat cardboard because it's bullshit.
And if you can't see this on the screen, but there's so much chunk garlic in here. I'm just here.
My mom would soak like bread crusts in milk and then mix it in with it.
Right.
So my mom, Kenny, when I was a kid, I lived in a household where my grandfather and grandma were off the boat, and my grandfather was the patriarch of the household. And then my Irish mother from the west side of Chicago would cook with my grandma for years and years and years. Then my grandma passed away, and my mother became this legendary in my neighborhood Italian cook. And like she almost kept it a secret that her last name was Collins and she was Irish. But
I just realized you asked me if I bought these meatballs. If you were in arm's reach right now,
right, you would hit them.
There'd be a snack, and I would deserve it. I would take it like a man. Yeah.
You should. Anyway, I'm sorry.
we were just talking about sectors. What can do well with the Fed still pedal to the metal? With the fact that we haven't seen the capitulation, is there anything that looks rosy, Matt?
Well, what looks rosy? I will tell you what I think looks what I think is safe. If you really want to just talk about safe, you got to go with the traditionals, right? The utilities, consumer staples, right? Those are the ones if you want to find some safety. The mega cap consumer staple names that are good dividend payers that they'll get hit, but they're not going to get hit nearly as much as some of the other names will get hit, right? But I also think you have to start to look at, there's been a lot of internal damage done to, parts of tech. So they've almost gone from growth to value, right? They become a value play. And so you really have to start. Healthcare would be another place I want to look to put some money into if you're really worried about, about the market, the Fed not pivoting and the market coming under pressure. And the banks I still love because I think in a rising rate environment, banks will end up doing well. I like some of the super regional banks as well as, I own JP Morgan, I own Bank of America. I like those names. I've owned them for a while. I'll buy them on weakness. I have been buying them on weakness. They're down about, 25% or 20%. But I own them lower too, right? So my average cost is still below where they're trading. So that's all fine. And so that's what I think. But I think you have to be still leery of some of those obscure tech names, even though they're down 70-80%, you might want to buy them as a quick trade. But if the market comes under continued pressure, which I think it's going to before this is over, I think we're going to test lower. Those names will be the first ones to give it up again, right?
So when Bobby, after this question, I want you to chime in here too. Particularly if you've been looking at oil much, because that's what I was hoping to dig into. And Bobby's better at that than me.
Yeah.
But I was going to ask you. So the dollar's been unusually strong, particularly against the euro. Is there a moment in time where the Fed starts looking at a couple things? One, the big multinational exporters have got to be hurting because of the strength of the dollar.
Yeah.
Two, the dollar. Brent Johnson. I don't know if you guys know Brent Johnson from Santiago Capital, but I'd love to have him on here at some point in time because he came up with the dollar milkshake theory a year ago, 8 months ago, talking about how the dollar was going to just whip all these currencies, and it has. Particularly emerging market currencies are really suffering greatly, and now the euro is obviously suffering as well. Do you think they're worried about those things, or are they still just singularly focused on inflation and that's it?
No, well, listen, I think they have to be worried about all those kind of all those issues that surround this inflation issue. But I have to tell you, I think inflation is at the top of his mind, or at least if you believe what he said, because he keeps telling you inflation is it, inflation is it, they're concentrating on inflation. They have to be concerned about what the strength of the dollar is doing to the multinationals, the oil names, the mega cap names that have all this multinational exposure. They at some point they have to be. And they also have to be concerned about what the strong dollar is doing to inflation in other parts of the world. Like Bloomberg ran with that article last week about the US is now exporting inflation around the world. So they have to be concerned about that, right?
So
which may mean that at some point they're just not as aggressive. I don't think they're going to pivot as soon as you do.
Oh, by the way, you took pivot to mean going from hawkish to dovish, and in my mind, I was going from hawkish to even neutral to pivot. And I've gotten people on Twitter call me to.
Everybody takes pivot as going from hawkish to dovish.
So
that's
I'm
right.
wrong.
Thank you. You're wrong again. Yes, thank you, Bobby. Because in fact, I answered you on that tweet when you put out you're going to pivot, and everyone was coming down on you, and you said, "Wait, do you mean hawkish to neutral or hawkish to negative?" And so I take it as hawkish to negative. You corrected yourself. You said, no, I only meant to neutral. Okay, well then fucking say that.
I should have said that. No, I agree 100%. I should have said that, and I did it again. And I'm going to try to stop making that mistake because in my mind, it was just pivot away from hawkishness. But I will forget that then. Bobby, what do you got on crude?
Well, first of all, remember when Michael is being driven out by Salazzo for the sit down at the restaurant, and his driver spins around on the bridge to lose the police? That's a pivot.
That's that's right. That's
spin around. You go the other way.
Go the other way. That's exactly.
So crude oil's. I heard you mention. I was sitting back down, and you wanted to see how far crude oil had dropped. High to low, the drop in crude oil was a little over 30%. So how does that play into inflation? My question to both of you actually goes to this. I don't believe the low is in the S&P, and here's why. You go back to 2018. The Fed hiked rates. They brought the level of rates to what, 3.5% or 2.5%, I believe, to the positive, and the S&P dropped about 21%, and then rallied from there. Fed pivoted, right, went back to easing, and that was that. It was gone. In this particular case, next week will be at 2.5%, one way or the other, right?
Absolutely.
The S&P has dropped almost 30%, 26, 27. I don't have it in front of me.
Well, the S&P right now is down 16% as of tonight.
But from high to low, it dropped to about 25, 26%.
Yes, correct.
So basically, if you were to take those as equals, right, it's about the same. I mean, 4 or 5%, who cares in the grand scheme of things? The reason I don't think the low is in is because I don't think they're stopping at 2.5%, because in 2018, inflation peaked to 2.9%, and now we're at 9.1. So even if we go down to 5, right? How does that affect earnings, Kenny, or does it?
No, it absolutely is going to affect earnings. But look, to your point, see, I agree with you that you and I are on the same page where I don't think the Fed's going to pivot at all because they can't. Inflation's way too high. And I don't think it's coming right down anyway. I think it's going to stay up there at 9% for a while, right? But for some reason, I don't know, I get this 3,600 as a place that I think that is the low. I think we're going to test it again and then churn when we get there. Now, if inflation doesn't at least stop going up, if it goes up again in August, if we see CPI go up again, then I'm going to be more in your camp where I'm going to take 3,600 out, because then I think there's a chance that it absolutely
you kind of betting on the optimism, like, by the time it gets back down there.
Yeah, but I think it's not going to get back down there anytime soon. That's the problem.
Okay.
I think
I don't disagree with that.
And
I'm stealing this from Cameron Dawson. Cameron Dawson put up a chart probably 3-4 months ago where she showed all of us were around for what happened to tech in 2000. And the 78% decline was peppered with 5 rallies of over 10% or more, 3 of which were over 20%, 2 of which were over 35%. So we can get these big rallies, and that was all in the process of dropping 78%. And I don't actually have my money where my mouth is, because I actually bought some stocks this week, but I feel like I'm buying things that I wouldn't be looking at for a little while. Does that make sense?
Yeah, of course it does. But I've done the same thing, because I don't know are you talking in a trading account or a long-term account
Long
that you're
term.
buying things? Okay,
Long-term.
so in my long-term account, I've done the same thing, right? While I don't think that the bottom is in, because I think we are going to test low.
With the hand moving going, knocking the shit around.
I move my hands too much. I'm knocking everything out. While I don't think the bottom is in, I am taking advantage as well and putting money because it's a long-term account. It's not a trading account. It's not a day trading account. I'm not swing trading. I'm not doing it right. I'm buying it because I'm adding to a long-term position. And
Right.
so I'm okay doing that, actually, right?
Mhm.
And I think that's what it sounds like you just did.
It is. So
Okay,
crude oil, the reason Jimmy brought up crude oil, and I ignored him and I shouldn't have. The crude oil is
Yeah, you could have.
really, crude oil is really close to falling another $30. And
$30.
this is something, yeah, and this is something Mike Arnold, who is our sort of technical strategist, kind of in-house because he's my business partner. He basically told us that on a weekly basis, if you get a close below, I want to make sure I have this level exactly correct, on the front futures contract, get a close below 93.81 on a weekly basis. So tomorrow, if we can close below 93.81, his next target is in the $64, $65 range.
Wait,
And
hold on.
with probability in the, I shouldn't give the percentage probabilities, but it's higher than 50.
Wait.
Right.
You're saying this whole story. Meanwhile, I'm looking at the dollar index contract. It's trading at 106. I'm going, what the fuck are you talking about? It's trading at 106. And then I realized I'm looking at the wrong chart. Okay, now I'm looking at the right chart.
We have
You're
like
talking about a
Jimmy's
closing
point-
below 90. I'm going, dude, it's 106.
Well, to Jimmy's point on inflation, we have demand destruction in energy, although this time last year we used more gasoline than we did in 2021 this time.
Yeah.
But I think that's going to die off quickly. I really do. Because, you know, you have the pandemic coop up, you know, that sort of cabin fever, and then the price hits. It's like, look, we're going on 1 or 2 trips, but then we're locking it up. I could see that happening. But Jimmy, to your point, and Kenny, I say this to every guest that's on, what exactly is success? And I'd like Jimmy to speak to this. What is success to the Fed? They're talking about 5.2% next year.
Right.
That means 5.2% after 9.1%. I already mentioned last week that in a little over 2 years, CPI has risen almost 16%.
Right.
And the previous 4 years, it only rose 9%. So I'm trying to figure out like where the consumer gets a break in here to make this work.
Can I answer that with the vitriol it deserves?
Yes.
Yes.
This is success for the Fed. This is what they told us they wanted for the last 15 years. I can show you 50 different instances where they said and explained why they needed inflation. They needed a cheaper dollar. There's 5 states that could have never, ever paid their bills, never met their pension obligations, and they had to weaken the shit out of the dollar. They can complain all they want about this, but this is the only thing that could save them. Now, you meant for the consumer. When do they really?
Okay, but wait a minute. The dollar's not
weak.
weak. The dollar has only gotten stronger.
Bull. That only it looks stronger because the euro and the yen are both pieces of absolute shit. Measure your dollars against other things, against my basket that I had, which 6 months ago measured against stocks, against real estate, against lumber, against crude, and the dollar is weak. They through 40% of the dollars that are in there now have been created over the last 2 years, which brings me to my point. And this is the thing that keeps me up at night. I want you guys to both comment on this and see if I'm crazy, because I think about real estate, but the same discussion could be about stocks. If, like, when we had Brian Westbury on here, he said, if all there exists is 10 apples and all there exists is $10, then each apple is worth $1. Now, all of a sudden, you increase it to $14 and the apple's value goes up. So stick with me a second here. So real estate, when I was thinking about turning and selling my house in Colorado, my partner there, and I said, no, I said, there's a new value and it's based on the weakness of the dollar, which is based on the amount of the dollar. And the market position in real estate is not like it was in 2007, 2008, when everyone's brother-in-law owned 5 homes and a stripper was a real estate developer on the side. And it's not the same now. And so in the stock market, in equity markets, I didn't see what we saw in the tech bubble where everybody had margined up. Is there a possibility that just this new level of the dollar, which is difficult to ascertain because we have to measure it in so many different ways, but if my theory is right and the dollar is weaker just based on the fact that we've added so many more dollars into the system, isn't there a level in stocks that's higher than it used to be, and that is the equilibrium level, and it has less to do with earnings? Does this make any sense to you at all, Kenny? No?
Wow.
Save me, Bobby.
There's a lot to unpack there. I mean, you put a lot out there, so
Yeah, that
I
was a
haven't had a
lot.
chance to think about it. I have to think about that. But my
What Jimmy
first
is
reaction
saying,
was,
basically, the simple layman's explanation for us dumb Italians is I'm tall relative to Jimmy. I'm 5'9".
right,
That's what he's saying. So
right,
the dollar is strong relative to a euro that's at its weakest point since its inception.
right.
So while we're seeing a dollar index rise, it's really on the backs of weaker currencies elsewhere.
Yeah.
And inflation is, it's
Okay.
hard to call the dollar strong.
Okay, but
when
wait a
gallon
minute.
of milk used to be $2 and now it's $10. I'm exaggerating.
Agreed, but let me ask you a question. Christine Lagarde now raised rates by 50 basis points, says it brings her into positive territory. Now they're up. She's at a positive 0.25% on rates. But as they raise rates at the ECB across the Eurozone, then the euro should start to strengthen. Am I right or wrong?
If the market determines that they're behind the curve, no. But if they believe that they're going to play catch up and win this game, which I don't. Both Bobby and I, when we go into the later part of the show, have short euro trades. But to your point, if they get aggressive, it should strengthen the euro.
Okay, well, so that's going to be the same with the Fed. The Fed's going to get more aggressive. It's going to continue to strengthen the dollar. No?
So here's, can I jump in here, please?
Sure.
Kenny, you're right. It should, but the ECB contradicted themselves with the transmission protection instrument.
Yeah.
Because what they basically are initiating is yield curve control, which Japan did in May, and we saw what happened to the yen from May to now.
Right.
So
is that what that is? The TP, whatever it was they announced. Is that what that is?
It's the transmission protection instrument. It's basically an instrument that any government within the EU, with permission of the ECB, can now buy assets. And listed in those assets is also private securities. So theoretically, Italy could buy stocks if they feel like it'll prop up their market. So it's a really bad thing because once they start doing that, you've got the ECB tightening, but you got the transmission protection instrument dumping euros into the market. So that's why the euro fell out of bed after rallying today, is because the two things theoretically contradict each other.
They contradict each other.
Yeah.
Okay.
Well, what could possibly go wrong?
That's interesting because I have not had a chance to educate myself on exactly what that was. I just saw that this morning and I went, you're kidding, right? I just figured it's another gimmick. I haven't even had a chance to read up on it. So thank you for clarifying. Thank you for clarifying.
So if I could.
Can I add something real quick?
Yeah,
because
please.
we mentioned the yen twice. And just for people who are watching, and I know most of you know this, but if any of you don't, back in February, the Bank of Japan decided they were going to pin 10-year rates at 0.25%, and they were going to buy as many bonds as they had to keep that. And what happened to the yen? It had an absolutely precipitous, catastrophic, huge fall, where even the people of Japan and in Asian countries, they don't seem to worry about the consumer as much as we do in other countries. They even said, perhaps we're in a little bit of trouble here. So that's why I make the assertion that the dollar is not strong. 70% of the dollar index is either the yen or the euro, and both of those two countries have been absolutely poor stewards of their own currency. But Bobby, sorry to interrupt.
Well, no, but I would argue to Kenny's point, for what Kenny does for his clients and does very, very well, the dollar strong relative to the other currencies still helps his clients, right? Theoretically, because it de facto helps to support U.S. equities to a certain degree. So what I actually wanted to do here, and I'm ambushing you a little, Kenny, but I'm confident that I'm not really ambushing you because of what you do. I've always wanted to throw in, and I didn't talk to Jimmy about this, and since the show really has his name on it, I probably should have, but I want to do a little segment in each one of these podcasts called In Plain English, where I go to your specialty and say, can you explain to people what this means? Now, we talk about futures so much on this show, but we will use terms like earnings compression, earnings expansion, EPS multiples.
Yeah.
Take one of those and explain in plain English what those are. Just pick one.
Just take a term and explain what it is.
Because like I used to see you on CNBC and you'd be like, that's just earnings expand or multiple expansion. And I'm like, I know what that is. But one of the things that guys like us tend to do is we use trading terms, and then regular people are watching and they don't know what we're talking about. So just pick one of the earnings terms and explain it.
So why don't we pick the S&P multiple? Why don't we pick the multiple on the S&P, right? When somebody talks about last year, the S&P traded at 21 times earnings, right? That's what investors were willing to buy. So if you took the S&P, say it was going to earn $200 for the year, right? The S&P earnings were $200 a year. So 21 times 200 gives you the multiple where people think the S&P should be by the end of the year, based if that's what it's trading at, right? In 12 months. So as you see the markets come under pressure, we've seen a lot of value get taken out of the market, and now earnings have come down. So now what happens is the multiple then has to come down as well, right? People are no longer willing to be that aggressive and pay 21 times. Right now, they're only willing to pay 18 times or 16 times. And so as that number comes down, then the value of the index has to be reflected in that, which is when you say, the market's now trading at 15 times or 16 times forward earnings. That tells you historically that's about where the market typically trades. Somewhere in between 15 and 16 is where you're going to find most of the time a bottom, unless you have an economy that completely spins out of control, which we might. And if we do, then that multiple is going to come even lower, right? But what that just tells you is it gives people a gauge on where they think value starts to be created, right? At what S&P multiple. And right now, I think we're at the level, which is why I feel fairly confident that I think 3,600 is kind of the lows there, right? I think that's put it in. That multiple, I think, is just over in the high 15s, based on the earnings estimate. Now, if we're going through this earnings season, and I think what you're going to start to see is earnings estimates for the third and fourth quarter come down, which means then the year-end target on the S&P in terms of earnings may come down. It's going to force the multiple to go a little bit lower, but we haven't seen that yet. And so far in the week and a half that we've had these earnings come in, 70 or 72% of them have kind of beat on the top and the bottom line. So it's not a complete disaster, but we've still got 2.5 or 3 weeks of a range of other industries that are going to start to report. And I think that's where you're going to see some nervousness. That's where you're going to see some caution going forward. That's going to force the multiples to come down, which is then going to force earnings estimates going to come down, and it's going to force the multiple, what people are willing to pay for stocks, to come down.
That's multiple compression then.
Right. That's multiple compression. So think about it this way, that you could think about it in terms of buying a house, right? 2 years ago, when rates were, 2.3%, you could afford more house because you could borrow the same amount of money at lower rates and afford a bigger mortgage. Well, as rates now have gone up, rates have almost doubled, gone from 2.75% in January to 5.4% today. Right. The cost of that same $500,000 mortgage has gone up significantly. So people are going to get priced out of the market. So they can no longer afford to pay the multiple that the houses were trading at. So the houses have to come down in price so that the multiple that you're willing to pay comes down. That's the compression. And that's what I think you're going to start to see. You're already starting to see it. I think in the housing, parts of the housing market are starting to come under some pressure, and rightly so. You saw existing home sales down big. You saw mortgages down big. You saw new home sales are starting to crack, right? And so you have to think about it in that same way. Did that answer your question?
It does. Yeah.
Okay.
Wait, are you done talking? I took a couple naps in there.
You're an ass.
Yeah. Oh no, you just figured that out now. By the way, but he did mention homes and you did mention rates, and I still to clear. And then we're going to go to the trading portion of this too. But what I meant, like my Colorado home, and I'm just picking out arbitrary numbers, was 2 years ago was worth $650,000. Yeah. They all of a sudden threw all this money in the system, and now that house is worth $1 million. My contention is that it's not up on market position and everybody's scrambling for it. Part of it is just the fact that the dollar that's buying it is cheaper than it was before. And it's not getting more expensive, because as much as they want to pull liquidity out of the system, M2 money supply is not going to come down by the 40% it went up. That's all I meant before.
Okay, but
does that make any sense?
No, that does make sense. But are you telling me that over the last 3 or 4 months, when rates have gone up, that the value of that property, wherever it is still the same value as it was last year, or has it come down?
No, it has come down, but it hasn't come down that much. So the mortgage part of it is absolutely the cost of the money, and the cost of the home and the payments figures into that as well. All I'm saying is that this one little piece, I don't think we're focusing on as much as it deserves.
Okay, so do you not believe the Fed when they say they're going to start to reduce the balance sheet? Because that's what you're talking about, taking money out, right?
No, I
You don't
do.
believe
I
that's
just
gonna
don't think
happen?
they're going to be able to do it so for very, very long and reduce it to the amount they expanded it. Not talking about their balance sheet. I'm talking about M2 money supply. But yes, yeah.
Okay, but listen, here's the deal. Think about this for a minute. This I keep saying this too when I get the opportunity. This problem didn't start in 2020 with COVID. This problem goes back to the great financial crisis in 2009 when
Amen.
when Bernanke, you know, when on that day, was it March 9th or whatever the day was, August 9th, when Bernanke announced the start of QE1, which turned into QE2, which turned into QE3 and QE
Yeah, no,
infinity.
I'm with you.
So they've been stimulating and holding rates at artificially low levels for a dozen years. So it took us 12 years to get where we are. If anybody thinks this is gonna be over in 3 or 4 months, they got another thing coming. We're
Out
in
of their
so deep, it's gonna take, I wouldn't be surprised if it takes 8 or 10 years, a decade to get us back to where you say would be normal, because they can't do it that fast. You're absolutely right. So I think
No,
it's
and I'm not. You might easily be right on that. We're going to switch over to the trade part of the show, and Kenny's going to stay on until he doesn't. So, but Kenny, Bobby and I got to talk about the trades before you tell us how stupid you are. So
All right,
put
go
on the AOC imaginary handcuffs, because I know if your hands can't move, you can't talk. Right? This is
I'll
good stuff,
keep my
Bobby.
mouth shut.
Okay,
Bobby,
so anyway, we're
so
going to talk about.
disrespectful. Bobby, by the way, you're in Naples. I'm going to drive over to see you one day, I think.
Dude, I would love that. I would love
Okay.
that. You're not far either.
Yeah, I'm not. It's probably a 2.5 hour ride.
Yeah, so I
Right,
would love
straight
that.
across.
Is that an ocean across? I see a reflection of palm trees in the window behind you.
Yeah.
And is that an ocean beyond that?
No, it's Glades Road. No, it's not an
Okay,
ocean.
all right.
It's Glades Road.
There's an ocean
Okay.
behind this wall about 25 minutes in the car.
Yeah, no,
Yeah,
I'm about 3 miles from the ocean.
Oh, so you could ride your bike or take a long walk if you want to. That's cool.
Yeah.
So I'm about
Okay,
11
okay.
miles from the ocean and I still ride my bike there. So how about that?
How do you?
That's awesome.
I know you're in damn good shape, by the way.
I'm in better shape than you two guys.
Thank you. Oh, yeah. Oh, you're not talking to me? God, I hate this show. I want it to be over so badly.
Wait, you
Okay,
do this once
Bitcoin.
a week? This is once a week?
Once a week.
Yeah, once a week. Yeah, it's a gas, actually.
I'll say this
really
is the
enjoy
most
it.
cussing on the show so far, which is good.
Yeah.
Good. Yeah,
Trying to
good,
get
good,
people
good.
used to it.
Okay, Bitcoin. Bitcoin had, from its down 75% for Bitcoin, 81% for Ethereum over the last 6 months. Got the absolute hell beaten out of it. Obvious to me when people were buying NFTs. That just means to me there's stupid money floating around. And again, this goes back to that theory about the dollar twos. People buying NFTs, they're buying stupid things.
Can I just say one thing? Does anyone
Sure.
even talk about NFTs anymore? I haven't heard that. I haven't heard anyone talk about NFTs in months now.
No, because nobody wants people to know that they were the idiot that paid $100,000 for a monkey. Or picture or something.
100,000 people
Yeah,
pay
100, yeah.
millions of dollars. All right, whatever. I'll keep my mouth shut. Go ahead.
But anyway, but here's what's impressed me about the big AOC handcuff. The Bitcoin and Ethereum trade over the last couple of weeks. It seemed, at its low, Ethereum was down 81%. At its low, Bitcoin was down, I think, about 70-something%. But Bitcoin started trading around that 20,000 level. Ethereum started trading around that 1,000 level. They took punches. They took 3 Arrow, Celsius, stablecoin projects through Terra, all these things. And all these things carried with it the rumors and the implications that there might be crap tons of selling of those two coins that were held as collateral. And then they have the people who are jumping on board to short them. And those levels still held. Well, last week, boom, we started to bounce above those levels. I personally think that this is a big deal for the cryptocurrency world. So here's my trade. And then I know Bobby's going to kind of like it because this is funny. We both came up with 2 trades today. And of all the things we trade, both of us picked the same 2 things and both of us picked the same direction. So Kenny, if there's going to be pushback, it's probably got to come with you. So this is not a trade I have on. I went to trade it. And apparently I did not have permission for this contract that I haven't traded yet. But it was the July micro Bitcoin. Buy it at 22,600. Target 31,000 on the upside, which 31,000 is kind of the congestion area from back in May. A stop, and this is what I like. We talk about this on the show a lot, Kenny. Sometimes I'll pick a trade just based on the stop level being an obvious level. I picked 18,000, which is going to be below the lows of the last couple of years and below the congestion period of the last couple of weeks. This trade would make, if you use the July micro Bitcoin, which is 1/10 of one Bitcoin, that makes $840 if you hit your target. It risks 460 if you're stopped out at your level. Kenny, what do you got?
Okay, so I like the trade. I'm just curious. Why are you picking your downside at 18,000, which is below the low?
Because my thinking is that congestion area, which was about 1850 to
Yeah.
21, that traded
Yeah.
3 weeks. I think
Yeah.
if it violates that on the downside, it shakes the confidence of a lot of people. That's
Okay.
what I think. And then people
Okay.
start all spinning it out.
Okay, so
Yeah.
that's actually, I think that's clever. So I like that trade. I think you're right. Because if you look at the chart on Bitcoin, which I'm looking at right now, it traded for, June and July in that very tight range, right? Up and up. And then it finally broke out. It now broke out through the trend line. It backed off a little bit. It's sitting right on it, kissing it. So I think that's a great trade. And you look at
Well,
it.
that's why I picked the entry point too, because it came back down and
Yeah,
kissed.
came back to
So-
the trend line.
But before, I know we've had conversation about Bitcoin before, and both of you had many, many questions about it, intrigued by it, not exactly diamond hand hodlers. The fact that it's come through this storm and now is rallying a little bit, does that impress you?
Me? Yes, it
Yes.
does impress me because I own my Bitcoin. I didn't sell it during all that crap. I was debating, should I buy it? I wanted to give it a little bit more time, but I actually think, as I watch it, I think that it is impressive that it held that during all this crap that's gone on.
Bobby, let's go with your
They're
trade
the
too
same
and tell
way.
me why you picked your levels.
All right, so I'm actually going to have our editor supreme Nader put up a chart while I'm talking about the levels on this, because again, myself, my technical wizard, and he's my business partner, Mike Arnold. He's a co-founder of Path Trading Partners. We do all our analysis together. Him and I worked on these double top and double bottom patterns. Now, you've all heard of them, right? But we made specific rules for double tops and double bottoms and tested the rules out and came up with a set of rules that pushed the probabilities up by an easy 15%. So on a daily chart, you have a technically correct double bottom on Bitcoin. When we got the close 2 days ago above the July, this is the futures, by the way, Kenny.
Yeah,
This is the
yeah.
BTC futures.
Yeah.
When you got the close on July 8th above that high was 22,550. That triggered the double, but the risk reward was off. So you couldn't buy it there. So you had to buy it on a pullback. Okay. So I bought it on a pullback. So I'm actually in this one in the futures, not big at all. Okay. So I'm in this one at 22,500. The measured move target for this is 26,460 or 470, right in that range. Now, I like my target better because A, it is in my parameters for this exact technical trade. We can pull the chart down now. B, it's also short of that gap. Now, that gap will likely fill, right? But the gap still falls short of your target, Jimmy. It's just slightly below your target. So if that gap fills and it fails from there, you'll probably want to start thinking about getting out of that one. Just advice, do whatever the hell you want. I don't really care. And then my stop is actually 20,305, again, because of the researched reasons we have those stops. So if you go back sort of 75% back into the pattern, it has a high probability of failing. So I've got this at about a 1.2, 1.15, 1.2 reward to risk ratio, and I'm happy with it.
So wait,
go
ahead.
No, you go, Ken.
So I'm just looking at this on the chart. You said your upside is where? 26,000?
26,470.
Really?
Yep. It's a measured move target. So basically what you do, and we don't mind, I mean, we say this openly on our webcast or anything, you take the difference between the peak and the left-hand bottom, you take that number and you add it to the peak, and that gets you to your target. Now, if that target exceeds the previous move down that caused the double bottom to form in the first place, you can't take the trade. The probabilities drop dramatically. This one exceeds it by a lot. Now, I will say, and I said this on my TD Ameritrade interview before this podcast, when we get to that target, I might rethink it. I might move my stop. So the way that I trade, Kenny, just Jimmy knows this, for me, a target is a place where an action is necessary. It isn't necessarily a place where you cut your trade.
Right.
Target means move your stop, add to it, subtract from it, take the whole thing off.
Right.
So I'll reassess what I do, but I have to make some sort of action at that part.
Or use options to hedge it to the downside.
Yes, absolutely.
Yeah.
You can
Right,
also
but-
go into the Bitcoin.
Right.
option,
But
so.
yeah, but to your point, the target is going to cause you to do that. At that point, you're going to make another
Absolutely.
decision. Right.
Absolutely.
And that's
I
the
will
way
do
you should.
nothing before that.
No, right. But that's the way you should trade, right? You should have your targets and then do exactly that. When it hits the target, either up or down, you have to then decide, okay, this is the target I set. You know, if nothing has changed and it causes me to pull the trade off, then you pull the trade off. But if something has changed that you like and you can move your number and still feel comfortable about it, then you've made a decision when it hit that target. So I think that's fine.
Public service announcement. Kenny, we talk about the micros a lot. I don't know if you know about the suite of CME products that are like retail sales contracts, but they give so much flexibility that part of that, if you have, there's 6 micros on, you can take off half of it. You know what I mean? So it allows a lot of flexibility. And I don't mean it to sound like a commercial, but they really are an unbelievably cool product.
Yeah.
Do you want to move to the
give
euro
the
now?
Bitcoin trade 3 meatballs.
3 meatballs.
The 3 of us agree.
Okay, the euro trade. Bobby hit this a little bit before, and I did short the euro when I saw that headline you said, and it hadn't broken out from a series of daily highs. I lost money today on stocks, but I made money today on the euro. Now I'm flat the euro, but this is where I'm going to put it on again, and I have a stop set to put this trade on because it seems to me that 1.02 is decent support in the euro. I think when it gives, the euro is going to fall back down to parity. So my trade is a stop in, selling the SEP micro euro contract at 1.0190, which is just below 1.02. Obviously, you guys are decent at math. Target 1.0010. There's a lot of decimal points in the damn euro trade, and I'm sorry for that. With a stop placed above at 1.0387. This trade would make $225 if you hit it per 1 micro, if you hit your level, and loses 100 if you're stopped out of your level. Do you like my methodology, Bobby?
Yes. And I'll tell you, Kenny, if you want to put up a daily chart for yourself of the euro, in the daily chart, what we tend to do on this is we've got this extended down move and then a little up move, okay, into what we call a rotation zone. We don't have time to explain what that is.
Right.
But when you're in that rotation zone after a down move, this is the first move up into it. If you could imagine, this is the bottom of the candles moving up. I'll draw a trend line here. And when we break that trend line, that's the next leg down. And I love that trade. And that's exactly what you accidentally did here. So I like this trade. That's why I also had a short euro, but I do one trade, you do 2. I'm gonna leave it out for this one because it's basically the same trade. It's like almost the exact same trade.
Well, so I got to ask you a question because I don't trade currency, so that I'm not going to opine on this but I got to ask you a question, Jimmy. In the trade that you just described, are you using some kind of a program that's giving you all those levels and telling you what to do, or is this just you looking at the chart, deciding I'm here? Here's my in, here's my out, here's my out, here's my out.
I'll usually, if I'm considering trading something, I'll have 3 different time frames up on charts, on my Bloomberg. And what I liked about this is several of the things agreed. The daily chart, like almost 3 or 4 out of the last 5 days, it got up to whatever that high was today and was rejected. And even after the ECB surprised and went 25 extra basis points, it shot right back up to those same levels that it rejected several times in the last week and traded down. So to me, that was obviously a position that was important. And I think then the bottom side of that channel is where I want to stop into a short below it. And it agreed on the daily, it agreed on the 240 minute, and agreed on the 60 minute that would be a spot that something was going to happen. Bobby, does that make sense? It's like kind of halfway of the Mike Arnold level of technical analysis, but not quite as sophisticated.
And actually, I'm trying to remember who it was, Kenny, when you and I and Jimmy were on CNBC a lot, you more than me and Jimmy more than me as well. There was one guy on there that always said the technicals say this. And I remember looking at the charts and going, I don't think he knows what technicals are. I respect people that trade fundamentally, that trade long-term. I don't respect, Jim and I have a friend named Scott Nations, who I think is a hell of a guy. Like he couldn't be a kinder, more ethical human being. But I was on CNBC once with him, and it was my job to do the price action, his job to do the fundamentals. And after I talked about the charts, he goes, oh, that stuff is just lines and squiggles to me. And I respect him for saying that.
Right. But to some people, it is just lines and squiggles.
To some people, it is just lines and squiggles.
Right. Because that's how I trade. I don't trade off the fundamentals. I just can't. I'm used to the charts. Right. That's how I do it.
Yeah. So you look at price patterns and you look at price action and you say, okay, I want to do something. Where's the best place to do it? And that's what Jimmy just described.
Right. But I think what's amazing to me is, Jimmy, when I heard you explain that trade, it's 1.00625 versus 1.0123. I'm thinking to myself, where the fuck you come up with those numbers because that's what I'm asking you. If it's a program that gives you those numbers, or is it just you in your head looking at the chart going, okay, this is it?
Well, like,
But
the
because,
target of 1.0010 should be obvious because parity is an enormous psychological level, and I
Right.
think we're gonna go after that level. Not quite sure that we're gonna break it. We probably will, but I wanted to put my target in ahead of that.
Okay.
And then the 1.0387, the stop out is above those series of daily highs. It's
Right,
just above it.
Right. So you picked 1.0387. You could have picked 1.039.
I drew a line and it said 1.0387.
Okay, so I guess
I drew a horizontal line.
Yeah,
and
yeah.
that's what
Okay,
it was. And then I gave it a bit above it. Right.
right,
Yeah.
because when you pick, like, you're very specific, 1.0387. I'm like, how the fuck did he come up with that number?
No, and it
But
is
since
funny
Kenny
because
didn't
I
really
hate when
opine
people,
on this Euro trade, I got to give it 2.5 meatballs.
hey, 2.5 meatballs, pretty good. I'll take
That's
that
not bad
any
at all.
day. Yeah, that's not bad. As a matter of fact,
2.5
this show's made
meatballs.
me just so goddamn hungry. By the way, I thought we were under a bit of a time limit. Doesn't one of you guys
We
have to
are. I was
escape
just
to
going to
do
tell you
something?
guys, I got to run.
Yeah, yeah.
Okay,
Listen,
let's call it a day. Kenny, where
Kenny,
can
we'll
they
do
find
this
you
again,
on Twitter?
please.
yeah, no, what'd you say, Jimmy?
Where can they find you on Twitter?
Oh, they can find me at Kenny Polcari on my Twitter page, right? I'm fairly active like you, so they'll find me.
We're not hard to find.
Oh, no. And by the way, I just have to tell you, I love everything you tweet. I think I love the way you do it. I love the sarcasm. I love the way you poke fun.
So it doesn't surprise you to know that I've taken a lot of punches in my
No,
day.
of course
And
not.
I've spoke when I should have shut up more than once.
But you know what? You say that too. You say, listen, I know I shouldn't say it, but I'm going to say it anyway.
Gonna say it anyway. Right?
Yeah, so you can catch me there at Kenny Polcari, which is my Twitter handle.
Bobby, you got any closing words?
Just thank you, Kenny. We'll do this again. That's it.
That was
Bobby,
good.
it's my
Ton of
pleasure.
fun.
But listen, is your contact information on your signature page that you sent me
Yeah.
on an email? All right, great.
Yeah.
Because I'm going to look you up, and one day I'm going to drive over there because I'd like to sit down and chat with you some more.
Dude, love to do it.
All right. And Jimmy,
I got a train. Yeah.
okay, the ball's in your court to arrange it with Scotty when we're coming to
Why
Brand.
is the ball in my court?
Because
Ask
it's
Bobby,
your
I don't
restaurant.
arrange things. I don't know. It's not what I do. I just
Not
sit
what he
and
does.
talk.
How about
That's what
this?
he does.
How about this? I'll fucking arrange it. You lunatic.
I
Listen.
do shit.
I'm happy to arrange it, but it's not my restaurant. I mean, I
I'll
said
arrange
Good
it.
point.
I'll
But
get it
Bobby
arranged.
will arrange it.
I'll talk
I
to you
gotta
guys
go.
later.
You hang up. No,
All right,
you hang
see
up.
ya.
No, I'll hang up.
Bobby, it's a pleasure. Jimmy, I'll
Good to
talk
see
to you
you,
later.
Kenny. Cheers, guys.